but I think you do get to an emotional graduation where when the market dips, you're excited versus disgruntled. That's where, again, emotion and patience comes into play, because when you're investing real money, it gets emotional real quick. So you have to have the discipline to cut that off. I have panic sold on many occasions. But over the years, what I've learned, if I look back on all those times that I panic sold, I regretted almost all of them, because I was invested in good companies. I wasn't invested in rinky-dink companies. I was invested in good companies. I panic sold.
Yes.
And I regret almost all of them, because I ended up buying more of them later at a higher price.
Yeah.
So what I learned was corrections are going to happen all the time. And I think that you graduate in investing at a certain point and you get to, I'm not saying I'm at the pinnacle or anything like that, but I think you do get to an emotional graduation where when the market dips, you're excited versus disgruntled. Because to your point, people do the exact, investing is not natural. It's not natural to our instincts. It's completely, investing, you have to completely do opposite of your natural human instinct.
You gotta do the opposite of what your emotions are telling you, because like stocks are going up, so you want to buy it and get in.
You need to pause, let that shit come back down, and then, but people don't want to do that. And I've done it too. I've done it.
And when it's going down, you want to get out because the water's hot, right?
And that's when you should chill. And that's when you should be buying more. And this is why we talked about the emergency fund, right? We talked about, you know, one of the topics we want to talk about is how life happens, right?
Yeah.
Markets go up and down. We lose jobs. We have deaths in the family. We have emergencies. We have medical bills. We have all kinds of stuff that can hit us. Yeah. Right? All kinds of things that can hit us. Life happens and investing happens. And if we don't have like an emergency fund to where when life happens, we can use that, then if our stocks are our emergency fund and they start dropping, you're going to sell. You're going to freak out because that's your money.
Yeah.
But if you've got 6 months of emergency funds saved out, I think you're a lot less likely to fall victim to that emotional situation, because you're like, oh, I'm good. I got this money sitting in a high yield interest account with a debit card on it. I'm getting 3% on it, 4% on it, whatever.
Yeah.
Which isn't as much as you can get in the market, but also you should have money that's liquid that you can get a hold of real quick.